And while it may be a messy season, so to speak, for retail spending, a new study highlights the names best positioned to benefit from the longer-term spending power of millennials and Gen Z. 60% of consumers are aged 18 to 40 now, and that's expected to grow to 70% by 2028. The group is already having an outsized impact on retail, so where are they spending? Cowen finding Nike still dominant in several categories, while Lululemon made the biggest jump in their annual survey, up 30% among favorite brands. But it's where and how consumers are finding brands that we see some big changes, with nearly half of shoppers buying secondhand on sites like Poshmark, more than 60% using off-price retail like TJ Maxx, and half of users buying brands they discovered on TikTok. For more, let's bring in John Kernan, the lead on Cowen's report. John, what's the biggest investing implication for you?
Yeah, there's huge implications across the entire consumer sector. We published this report with 9 other Cowen analysts. It's really the most unique data set on Wall Street regarding variance between younger and older consumers. I think the big macro takeaway is the biggest wealth transfer in history is underway. There's $60 trillion in assets that will transfer to Gen Z and millennial consumers over the next several decades. So their spending power will massively increase. And there's also, obviously, as you just spoke on, a lot of micro takeaways as well as it relates to companies and themes.
Sure, and we're showing Nike, Lululemon, TJ Maxx. I all mentioned those are stocks you're positive on?
Yes, they all showed really strong gains year over year in the survey. We have a time series now of 4 years of this data of surveying younger consumers. Lululemon stood out as the biggest gainer among the younger consumers in terms of brand preference. Nike still has a huge lead in the categories it remains dominant in sneakers and apparel. And then social commerce, which my colleague John Blackledge covers, Facebook, Instagram, and TikTok, they showed huge gains in users and huge gains in purchasing patterns among younger consumers on those social platforms. So big themes. Those are the big themes that we saw.
And normally Facebook would be the investing implication, but I think they, face totally bigger challenges right now. TikTok, obviously, I don't know how you invest in that unless you have any ideas about which brands that might favor.
Well, social commerce has huge implications across retail and consumer because the power of these platforms, whether it be Facebook, Instagram, TikTok, the average revenue per user metrics at Snapchat were up 76% year over year. Last quarter, they were up 46% at Facebook. So
wow.
The power that these platforms have now and the network of users they have, the pricing power for their advertising has become much, much more expensive. So the customer acquisition costs across retail digitally are becoming much more expensive. It really now favors brands with scale digitally. We talk about that quite a bit in the report.
And maybe if this is a choppy retail season, it could offer some opportunities for people to get in on names that you think kind of have secular staying power. Are there any smaller names that you think are worth highlighting here? Many of these are already large incumbents.
Yeah, sure. Well, supply chain concerns have led to a rapid repricing of risk in the sector. Valuation multiples are down on average 15 to 20% in the sector, really just since September. That's the first correction we've had really this year. So there's some cheaper stocks out there. Burlington Stores, an off-price retailer, roughly a $15 billion market cap, is one we think earnings can double over the next 5 years. And Deckers Brands, which is about a $10 billion market cap, we think earnings can double there as well.
Deckers owns UGG, right?
Yes, they own UGG and Hoka. Hoka right now caught up in a lot of the supply chain disruption coming out of Vietnam.
So a final word on this, John, before we go, is people, again, might be reassured about buying some of the names that this favors in the long run. What do you think is going to happen in the next 8 weeks now? How much, are the stocks pricing in too much disruption?
Modeling this space right now is incredibly difficult. The conversations we have with buy-side investors, there's incredibly low risk tolerance for this space right now just because of the amount of uncertainty. I don't think any of this supply chain inflation is necessarily transient. There's going to be input costs, transportation costs, inflation into next year. Every piece of the supply chain is seeing inflation, whether it's the trucks, the ports, the ships. Everything right now is inflationary, and there isn't some magic wand necessarily on January 1st that resets everything. So a lot of inflation, a lot of uncertainty. I think people need to be opportunistic, but recognize there's a tremendous amount of uncertainty in the next 8
Yeah,
weeks.
the president himself meeting with a lot of leading retailers right now to try and sort this out. John, thanks for your time today. It's great to have you and to go through the results of this study. Again, John Kernan of Cowen.
Shepard Smith here. Thanks for watching CNBC on YouTube.